In the meantime, now we're going to turn to new economic data released by the Bureau of Labor Statistics. The Consumer Price Index rose 0.6% in the month of August. The index for gasoline was the largest contributor to that rise. So I want to bring in Javier David to explain all of this for us. He's the managing editor for business and markets at Axios. He's also a CBS News contributor. Javier, what does it all mean? Break down what this number means and how it compares to expectations.
Yeah, disinflation summer interrupted. I really wish I could sit here and say this was a good number, but it really wasn't. As you mentioned, the numbers hotter than expected in the core. This is something the Fed does not want to see. It accelerated from July. The headline number was also a little higher than anticipated. This is more or less overall the strongest numbers we've seen in about a year or so. The consensus estimates had expected a cooling, but it really looks like all of the pressures that we're seeing in the energy markets, global energy prices are upending the status quo. So the gasoline index, and it just goes to show you the ways in which, even though the official data strips out energy and food prices, which tend to be volatile, it tends to filter down into other areas. So when gas and energy prices are going up, you can better believe that just about everything else is going to go up with it, because it tends to filter into the system in various ways and you really can't control it.
Right. The Fed will be meeting next week after not meeting last month. So the European Central Bank is expected to announce their decision on rates tomorrow. Should we expect to see the Fed mirror the European Bank? Usually it works the other way around. So what should we expect?
So Europe is in a little bit of a different situation than the U.S. currently. The U.S. probably is like the strongest port in the global economy right now. Europe's growth is really sluggish. Inflation in the bloc is actually even stickier than it has been here in the United States. It's pretty much a toss-up or a jump ball, but the risks for a Eurozone rate hike are significantly skewed significantly higher there than they are here in the U.S., where the Fed may pause, but after these numbers, that's really not a given either. But ECB, they've been very, very hawkish about inflation. They've talked a lot about just kind of like a lot like the Fed has, just not quitting until they feel the job is done.
Mm-hmm.
They're really much at least as focused on inflation as the Fed is.
Can we talk a little bit about crude oil prices? They've reached their highest level since late last year. How will this impact the consumer? And are there concerns over maybe the supply chain?
Yeah, crude, there's been a lot happening, and a lot of it is geopolitical. Part of it is just demand. We're coming off of the summer season where people are driving more. That tends to put upward pressure on prices, but the global picture has not been encouraging. The markets were really wrong-footed about a week or so ago when the Saudis decided to kind of continue this oil production cut that really scrambled the calculus. To be honest, we may very well see $100 a barrel by the end of the year. That means more upward pressure on gas prices. And it just kind of goes to show you why the Federal Reserve, I'm sorry, not the Federal Reserve, but the public really rates the White House low on the economy. When you go to the gas pump and you see these prices, some of this is really outside the federal government's control, but consumers are not happy about it, and that makes them very downbeat about the economy.
Mm-hmm. Javier David, thank you very much.
Sure.